Hello, my name is Larry Jones and welcome to Stock Up with Larry Jones. We post videos like this every day on this page. So go ahead and hit the like, subscribe, and notification bell. I'm going to be talking to you about how you can become wealthy. I'm going to talk about seven things that you're doing that's keeping you poor. More importantly, I'm going to talk about seven things that's going to help you become unpoor. All right, seven habits that we need to follow or adapt to that's going to change things greatly for you. No fluff. No fancy graphics. I'm just going to go right to it. All right. So I need you guys to take a pen out. For those of you that are new, I want you to write a few things down. These are personal things that I have done myself to gain generational wealth, and I want to share it with you guys. Okay, like I do every day on this page. All right. All right, let's get right into it. Let's go to number one. These are realistic things that you could do that will help you become wealthy or stop you from being poor. Number one, I want you to write it down. When you write things down, it makes it plain, okay? So, number one, you've been lied to, right? I want you to know that. You've been lied to. Now, here's the lie. You have to know that the cards and the odds are stacked against you from day one. You've been taught how to be a good factory worker from start, okay? So you have to understand that the 95%, especially here in America, of what let's call them worker bees, we've been taught to go to school, get a college degree, and work. And that's fine. But the average American, regardless of how much you make, is still 2 to 3 paychecks away from being broke. The difference in someone making $50,000 and $150,000 is just the size of car that you drive and the size of house. That's about it. You're still 3 paychecks away from being broke, and you're still in credit card debt. So you've been taught all of these things in school, and there's nothing against school, but you're not taught finances. And that's by design, because the 5% of the wealthiest Americans get their income from the 95%, because the 5% own the companies of the goods and services that we consume, right? And who purchases? The 95%. Always remember that. So we've been taught how to be the worker or the worker bees, and that's the 95% of us that buys the goods and services that the 5% control. And that's why even during recessions, depressions, and COVID, the 5% literally become wealthier. All right? So that's number one. Unbelieve the lie, okay? And realize that you've been lied to, okay? So it's not all your fault. Number two, stop buying junk. Stop buying junk. A lot of the junk are manufactured by who? The 5% we just got through talking about. A lot of the junk has been manufactured by the 5%. My 7 things are the real things that's going to help you in 2024. All right. So that's number 2. Number 3, buy the companies that manufactures the goods and services you and I consume. If you are going to Starbucks every day, then own some Starbucks stock. If you are going to Walgreens every day, own Walgreens stock. The same thing with Walmart, Walgreens, Home Depot. Everything that you consume, you should own stock in these companies, especially if you consume them every day. If you have to have the new iPhone, then for goodness sakes, buy some Apple stock. How much? How much are you spending on your computers? How much are you spending on your phone? Are you the type that has to have the new phone every 3 years? If your phone costs $1,200 every 3 years, then you invest $1,200 every 3 years into Apple stock. And you say, yes, Mr. Jones, but I could pay $30 a month. Then you do the same thing with the stock. You can buy fractional shares at $30 a month. Okay. So that was number 3. Here's where it gets really, really interesting, good people. Let's go to number 4. Number 4, invest 10% of every dime you make. You cannot save your way to being financially free. Your money sitting in a bank is not making money for you. Remember this. If your money is not working for you every day, then you will have to work for money every day. You must send your money to work. And just having money in a bank is not working for you, okay? Your money has to work for you. All right. So, number 4, invest 10% of every dime you make. The average American makes just over $50,000 a year. Write that down. $50,000 a year. The first thing I want you to do, if you have no retirement plan, is open up a Roth IRA. ROTH-IRA. You could call Fidelity or Schwab or any broker, legacy broker, I would suggest, and they will walk you through that process over the phone. And you could have it done in literally 10 minutes. Just that simple. It's not that complicated, but you must do it today. So you're going to open up a Roth. Why? When you go to pull that money out, having it in there a minimum of 5 years and being at least 59 and a half, it will be tax-free when you take it out. It's what's called pre-taxed. Okay. So remember, number 4, invest 10% of every dime you make because you're going to pay yourself first, right? Then let's look at some numbers. The average American makes just over $50,000 a year, right? If you're under the age of 50, as of 2024, this year, if you're under the age of 50, they have raised the amount that you could put in. You can put in $7,000 a year now into a Roth IRA, all right? If you're over 50, they allowed you to add even more. You could put up to $8,000 into a Roth IRA. All right. So let's just take that most of you are under 30. Okay. I mean, under 50. Right. So if you're under 50, you can invest up to $7,000 yearly. Do you know what $7,000 yearly is? $19.18 per day. $19.80 per day. Just remember that. $19.18 per day. So let's just say $20 a day. All right. I need you to adapt these habits today because you're going to see how that will be life-changing over a period of time. All right. So even if you start at the age of 30, by the time of retirement, age 62, if you put it in something even like the top 500 companies, which averages about 10%. If you're looking for a ticker symbol, that's ticker symbol VOO. All right. Or you can buy the overall stock market. That's ticker symbol VTI. You can literally buy fractional shares of that, like we covered. If you just did $19.18 a day, every day, all right, that would be at the age, if you started at the age of 30, by the time you got to the age of 62, that would be $1,429,000, all right, and 78 cents, all right, over those years of what? Compounding interest. The trick to becoming wealthy is consistency. Consistency. Warren Buffett, which we're going to hear from later, his number one message is investing in good companies for a long time, right? whether the market is up or whether the market is down. But consistency. Now, just think about this. $1.4 million. How do you double that? Marry someone with the same ideology. If that person don't want to invest any money, then they don't deserve you. I am Larry Jones. I'm a straight shooter. I shoot it to you straight. Tell your sons and your daughters that he or she don't deserve to be with you if all they want to do is spend money. They don't deserve to be with you. I'm just going to be frank, all right? So now your $1.4 million turns into $2.8 million by the age of retirement, okay? Let's move to number 6. Number 6, create a side hustle. I dare you to do it just for 1 year. Just for 1 year. Create a side hustle, right? Now, in that side hustle, take out your expenses, and I need you to invest every dime. Why? For those of you that are older, this is going to help you catch up, right? And yes, even after you max out your Roth, you start investing in a regular fund, okay? And listen, you have less time, right? Because you're older. I'm talking to you 45, 50, 60, 70-year-olds. It's never too late. Create a side hustle. That is number 6. Now, side hustles are all over the place. You can Uber Dash, right? You could create a Fiverr account, and even you could. Someone's child need help with math. You could do that. Whatever you are good at. If you're good with spelling, you could be a spell check for someone writing a book. There's so many ways for you to make money and never even leave your house. But if you don't research it, you'll never know, okay? Create a side hustle. That's number 6. And here's number 6.6, okay? 6.5, all right? Listen, there's been a lie that's been perpetrated for years. Do what you're passionate about, and you'll never work a day in your life. Well, I'm here to tell you that that's a lie. Again, that's a lie, okay? Listen, here's the keys to success. I'm a living witness. Do what people will pay you for and become passionate about it, okay? Remember that. Please write that down. Do what people will pay you for and become passionate about that. Myself, just as early as 2018, I had a good paying job, but I was also driving Uber. I was driving Uber, driving an hour and 20 minutes to get to the area where Uber was hot, because where I was living it was not. And I took that money and did what? I invested it, all right? Because I was buying back the time. Buying back the time because of my age. For those of you that are older, never think that it's too late, but you must start. So what will happen is you will ramp up that first year because you have to catch up. Now here's number 7, and I need you to understand this. Set it and forget it. What I mean by that is set it on automatic. These brokerages, TD Ameritrade, Schwab, these type of brokers. I have brokers that are in my description below. But for your Roth, I want you to do a legacy broker, something like Fidelity for your retirement. That's what I suggest, all right? And so when you max that out, what I want you to do is, even in your Roth, I want you to put it on automatic, meaning whenever you get paid, do you get paid twice a month? Then you invest twice a month. Do you get paid once a month? Then you put it on once a month. So once a month, it comes out of your savings account and it goes into your trading account. And then once a month, I want you to go in and buy fractional shares of good companies. Now, I would suggest that at least half of your portfolio be the S&P 500 or the overall stock market. That's what I would suggest. And then find you some good companies. I have more material down, or more resources down in the description below, that will help you find good companies, or just come here every day. We discuss them every day. Now, what I'm going to do now is I'm going to share my portfolio that I've been DCAing in dollar cost average. That's what DCA stands for, dollar cost average. I've been doing these portfolios, 3 of them I'm going to share with you, and I want you to see the returns that I have in a short period of time. And then right behind that, we're going to hear from Warren Buffett. So I'm going to share with you 3 of my portfolios. These are ETFs. Just think of a bunch of stock all in one basket. That's what ETFs are. To the left, you could see VUG, VTI, VOO, which is the top 500 companies, and you got QQQ and ARKK, right? Now, if you look to where it says total gains and losses, that was the last trading day of 2023. We had a sell-off and the market dropped, right? But at the bottom there, if you go to the account total, you could see that this entire portfolio is up 17.97%. Okay, that's total. That's the total gain. All right, this is the power of diversification, meaning not having all of my money in one stock. And these are all what? ETFs. This is my ETF portfolio. Now let's go to some blue chips, right? Remember, Friday was the sell-off, but let's just go to the bottom. As you can see, this portfolio is up 22.28% for the entire year. To the left there, you could see I have Tesla, Nvidia, Microsoft, Google, Amazon, Apple. These companies aren't going anywhere, and I'm going to continue to invest in them for years to come. All right. And then we have some growth stock. This is my growth stock portfolio. And we have on this page a lot of people following, doing what we call our $5 a day or $1 million cup of coffee. You can see we have SoFi, Roblox, Palantir, DraftKings to the left. But if you look at this portfolio, you could see that this portfolio is up 57% at the bottom.
But if you'd been a pension fund and you put $1 million into the S&P 500 at that time and reinvested it, during my investing lifetime, that million would have turned into $5.3 billion. You would have gotten, for every dollar you put in, you've gotten over $5,000 without ever reading a headline, an annual report. You didn't have to know accounting. You just had to believe in America. It's amazing how hard people make what a simple game it is. But of course, if they told everybody what a simple game it was, then 90% of the income or more of the people that were speaking would disappear. So there's really a little too much of us to expect of human nature that people will explain why they really aren't adding any value to what you can do by yourself.
It doesn't take brains, it takes temperament. Pension funds in 1970 put 100 and some % of their new money in stock because they were wild about stocks. Then they got a lot cheaper and they put a record low in, 9% of their net new money in 1978 when stocks were way cheaper. People behave very peculiarly in terms of the reactions because they're human beings, and they get excited when others get excited. They get greedy when others get greedy. They get fearful when others get fearful, and they'll continue to do so. And you will see things you won't believe in your lifetime, and securities markets. And the country will do very well over time, but you will see these huge waves. And if you can stay objective throughout that, if you can detach yourself temperamentally from the crowd, you get very rich. And you won't have to be very bright. I mean, I'm sure you are. But
so there you have it from one of the smartest investors in the history of the stock market, Warren Buffett. You don't need a lot of brains. All you need is time and temperament, all right? And consistency. Find a good company and just invest in it long term. Long time, should I say. Listen, this is what wealthy people teach their kids and their kids' kids, but it's what the school system refused to teach us. And it is by design, okay? So listen, I have free stuff like this every single day, but if you want to fast track your investing, I have a link below, the top link below. It is Stock Up You, Stock Up You. Come and learn. I have hours and hours and hours worth of information that's going to help you get to your goal quicker, all right? So that's Stock Up You. That is the top link below. And then the second link under that is Moomoo. It is a trading platform. It is a broker. So you got two links below. Just hit the title of this. If you're on your cell phone, hit the title of this video and it will drop down to the description below. Hopefully this has helped you guys in some way. Please leave me a comment, share it with your friends, and join us on our next video. As always, in signing off, live, love, laugh, and learn.